So the offshore tax exemption, this is a big topic, huh? So this video is part of a series of 5. If you didn't watch the other one, I strongly advise you to have a look at the playlist because this is the last video of the playlist. So as I said, offshore tax exemption is quite a topic. You know, people think that if you go to Hong Kong, it's 0% tax because of this offshore tax exemption. No, it is not. It is not 0%. As we explained a bit earlier in the accounting, the taxes in Hong Kong is two-tiered, 8.25 to 6.5. So why people believe that there is the 0% tax in Hong Kong is because Hong Kong uses a system of territorial source principle of taxation. So basically, we will only tax profits that originate from Hong Kong. Okay, in theory. Okay, in theory, you will see why I'm saying in theory, because in practice things get a little bit complicated. So what we are looking is profit that is sourced outside in Hong Kong is not taxed in Hong Kong. So you don't have to pay profit tax on the profit source in Hong Kong. And how we'll define that a profit is sourced in Hong Kong? Well, the companies carries on a trade, profession, or a business in Hong Kong. The trade or the profession or the business derives profit. So basically you make profit out of your business. Okay, so until there is pretty simple to understand. Okay, this is where it gets complicated. The profits arise in or are derived from Hong Kong, and this is where everything gets pretty heated, because this is really vague and subject to discussion. So quoting Ernst & Young, the legislation does not define specifically the meaning of arising in or derived from Hong Kong. That's the reason why the application of territorial source principle is so complicated and controversial. So if you believe that you will open a company in Hong Kong and because you have nothing here, you will get the offshore tax exemption, you just have to tick a box to get it. This is not the way it works. And if it's sold that way to you, the person is selling it to you is scamming you. Okay, I tell you straight away, it is not easy, and it's not me saying it. You can see it here. I quote it on purpose. I quoted Ernst & Young because I know some people will say that I know nothing and da. So look, this is not me saying it. So it's not that simple to actually get the offshore tax exemption. Now, what are the principles that are being used to determine the source of profits? And here again, this is not clearly defined. These principles are given on the IRD website. So I will put some link in description below for you to go and read and make your own mind. But this comes from a court case. So it's a jurisprudence, if you want. You know, it's getting back to what the court decided in the past. And this is these are the 6 principles that came out of it. The first one will be the matter of fact. So there is not a recipe for the offshore tax exemption, and every case will be seen individually and specifically. So we can't really forecast exactly whether you will get the offshore tax or not. The operation test is where are your operation being carried on? You know, where do you sign your contracts? Where is your staff? Where is your office? Where is the director? Where are your suppliers? Where are your clients, etc.? And if some of these is in Hong Kong, then it's not really helping your case to get the offshore tax exemption. Antecedent or incidental activities will not be considered in this operation test. The other one is the place where the decision is made. So if you make your decision in Hong Kong, again, that is not helping you with your offshore tax claim. And sometimes you will see that this will clash with your tax planning. We get this case of a UK citizen, and back then he was resident. Since then he left just as part of his tax planning, but at that moment he was resident of England, and his international tax advisor advised him to hold his board of director in Hong Kong so that his company would not be considered a UK company. I mean, it was part of our whole plan. I make things simple. The issue is that this client was also asking for offshore tax exemption. And if you look at it, if you start to hold your board of directors in Hong Kong, it will be quite difficult to get the offshore tax exemption, because you're actually showing that the decisions are being taken in Hong Kong. So sometimes this will clash with your tax planning, and you have to be careful about it, because your tax planner may know your jurisdiction, but he might not know Hong Kong really well. So he might give you some actually advice that might be a bit annoying in the future. Yeah, in theory it works. In practice, there's some details that they may miss. The gross profits from transaction, this is what is really considered, is transactions are being considered individually, and we look at the gross profits of those transactions. So you can get the offshore tax for the entire company, but you can also have offshore tax for certain profits, certain transactions. I give you an example. Normally, I don't really advise my clients to opt for offshore tax exemption. So we only do it if they really want it. And even when we do it, we do it through a partner because we don't have enough case to actually look at that, and it requires a certain expertise that that is not trivial, really. So you better get somebody that just spend his time doing that nonstop, But we get the case one day of somebody having a business with Russia. So he was a musician and he did some business with Russia. The deal was signed in Germany, and Russia had a withholding tax on this service, a substantial one. So what we advise the client is to actually ask for an offshore tax exemption for this specific transaction, because he could prove that it was performed outside Hong Kong. The contract was signed in Germany. The service was rendered in Russia. He paid tax in Russia on this service. So it was kind of a good case for an exemption for that specific transaction. Plus the transaction was sizable, so it made sense to try and ask for it. Eventually he got it, actually. And finally is a business presence overseas. So if you have offices outside Hong Kong, obviously it helps showing that Hong Kong is not the main base of your operations and you have other stuffs going on somewhere else. No, it's not. Again, this is not all black and white. If you ask for the offshore tax, there will be a lot of questions, a lot of back and forth with the IRD to actually determine whether you are offshore or not. And you need to be prepared with that, because this is not the way people are selling you the offshore tax exemption. I know that you can see a lot of things on the internet where it's like, you just ask for it. It feels like you just have to put a V in a box and you get it. And maybe it has been like that in the past, but it's getting more and more difficult, especially with Hong Kong trying to be a good trade partner with the OECD countries and the rich country club. Yeah. So, as I said, I'm not a big fan of the offshore tax. I would rather just pay tax and done. And here are 5 reasons why you should not ask for the offshore. Maybe you are too small. If you make 10,000 euros a year profit, don't bother. You have to remember one thing. Offshore tax is expensive and it's complicated, which is my second point here. If you are too small, you will just spend a lot of money and energy to get an offshore tax that will cost you more eventually than just paying tax. Okay, and this can have other implications, which I won't cover now. But yeah, if you are too small, why bother? There's other ways of paying less tax. Passing deductions in the company, for example, and that's the most common one. If you don't go the offshore path, And at the end of the day, as I said, 8.25%. If you are small, that's not much. Expensive and complicated. So I will cover the complicated soon. I mean, I kind of did it already. I show you that it's not straightforward. It's not an easy process to get the offshore tax. But I will explain you a bit more the process in the next slide. Expensive. Well, at this moment, when we work with a partner, our partner is charging our clients 4,000 to 8,000 USD for the application. Okay, so it is not, as I said, if you make 10,000 USD profit a year, or even 20, I would say even 50,000 USD profit, is it really worthy to go through this process? I'm not sure. This you have to think about it. And the price I'm mentioning are not the cheapest on the market, but are not that expensive neither. It's kind of it's a good price. That's why we decided to work with them. We couldn't do cheaper than that by ourselves. So, and they are a big international tax advisor firm, and they know what they are doing. So that's why we work with them. The third one is the lack of proper tax planning, especially since 2018, where things got so transparent. And I can tell you, things are getting more and more transparent. The OECD is working hard to make the bank secrecy obsolete and make things extremely transparent. So you have to be really careful nowadays when you want to do an internationalization of yourself and your business. You have to do it the proper way. And many people just do it cowboy. they don't have proper tax planning advices, and they just want to ask for the offshore tax exemption, and they have to think that these will have consequences in the future. So claiming offshore tax exemption in Hong Kong, okay, cool, but what is the plan for the rest? So if you don't pay here, where you pay, where are you resident personally, where is your company resident? Because obviously, if you ask for the offshore tax exemption, your company is not resident of Hong Kong. It will be somewhere else. Where is this somewhere else? So these are questions that you have to answer and talk to an expert in international tax planning that knows your jurisdictions, and if possible, that knows Hong Kong as well. Fourth is that there are other options. As I said, if you are too small, options such as just making expenses, is an easy one, or just paying 8.25%, is no big deal if you don't make much. It becomes a bit more painful when you make $2-3 million in profit, where, okay, it might look like a sizable amount of money that you have to pay in a jurisdiction in which you have no operations, but personally, I don't mind paying taxes if it's reasonable. The more you pay, the more you earn anyway. So but there are other options. Or also when you have a bit more complex structure with several entities around the world, there's other way to send the money from one branch to the other, or from one entity to the other. And by doing that, sometimes you have nothing to pay in Hong Kong. So if you look at the Bulkong structure I mentioned earlier, with the Bulgaria holding and a Hong Kong company, well, you will not pay tax in Hong Kong anyway, because everything will be brought back to Bulgaria. So why would you even bother in such cases to ask for the offshore tax exemption? But anyway, that's another story. Fifth one is that it takes a long time and there is no guarantee. So you will go for a really long process of 2 to 3 years and you're not even sure to have it eventually. That's also one of the reasons we advise clients going for the offshore tax exemption to use a parallel strategy. So on the one hand, yes, you can ask for the offshore tax exemption. But on the other hand, assume that you won't get it and still pass expenses, etc., to reduce your taxable income, because if you don't get it, you will have to pay tax on the entirety of your turnover instead of the profit. So don't get lazy with the accounting. Do a good accounting and put as much expenses as you can on the business to avoid having too much tax anyway. Plus, until it's accepted, you still have to pay your taxes. After, when it's accepted, you can be reimbursed, but until it's accepted, you will have to pay tax on a yearly basis on your profit, if there is one. Now, in terms of timeline, this is something that worth knowing if you want to go for the offshore tax exemption. So let's say you open the company and you start operating. 18 months later, you will receive your first tax return. Then you will submit it back to the IRD, and you will ask for the offshore tax exemption. This will take 3 to 6 months. So the time you fill it in, send it back, they read, and they send you back a reply. Okay, so they will send you the first letter. When you receive the letter, you will reply. Again, it will take 3 to 6 months for you to reply, for them to review and send you back a reply. Most of the time, one letter will not be enough. You'll receive a second letter. You can have a third and a fourth, etc. But okay, most of the time, 1 to 2 letters is enough if you reply properly. You get a second letter, then you reply again 3 to 6 months, and then you have a confirmation. So if you look at it, it would take 2 to 3 years, and Jerry is more 3 years than 2, to get a confirmation that your business is actually considered offshore by the Hong Kong government. There's another method which consists in doing an advanced ruling, but really few consultants do it because it's more. So advanced ruling is even before starting the business. You do the offshore tax claim. Now, the issue with the advanced ruling is that you have to be extremely specific with your transaction before even running the business. You have to say, look, these are the transactions that we'll have, and then you ask the offshore tax exemption. If there is any change in the future, you have to tell the IRD, and they will look again at your case. So this is a system that few consultants are using. It works if you know that you will have only a few transactions and you want to be sure before coming to Hong Kong that they will be considered offshore. So you have 2-3 huge transactions that you want to pass through Hong Kong, then yeah, doing an advanced ruling would make sense. But if it's a regular business with normal operations, going through the advanced ruling is something that most consultants don't do. They just go through the system I'm just showing you here. Okay. So offshore exemption, yes, why not? But get a proper tax planning. Know what you are doing. Don't listen to gurus or things like that. You know, ask expert, get proper advice, because it's not as simple as you may think. You know, and even me being in the business, it's something we don't even do, so we outsource that. So when you have a guru maybe that is an expert in e-commerce and tell you, look, you should get offshore tax exemption in Hong Kong, I mean, nothing wrong with him. Maybe it worked with him in the past or something, but you don't know. Really ask question to relevant person, because it's not an easy, straightforward process. Now, this is, as I said earlier, this is a video that is part of a 5-video series. I put everything in a playlist. If you want to watch the other ones, go ahead and have a look at the entire series. If you have any questions, feel free to contact us. I will leave our information below. You can contact ATHENASIA Consulting. I put the info at ATHENASIA in the description, and we'll be really glad to answer all your questions and tell you how we can work together. So good luck with your research, and hopefully we talk soon. Thanks for watching. If you enjoyed this video, you should definitely check this video as well. And also don't forget to put a thumbs up, subscribe to the channel, and ring the bell. And if you have any question, don't hesitate to send us an email at info@athenasia.com. And I see you in the next video.